Hi, I'm Brian Iverson, and this is the Investor Breakout Weekly Insight. Let's talk about what happened this week. The monthly US jobs report might not sound exciting, but it's one of the most important numbers in the market. It drops once a month, usually the first Friday, and includes key data like how many jobs were added, the unemployment rate, and wage growth. And it moves markets. Why? Because these numbers shape how investors and the Fed view the health of the economy. And a strong report can suggest inflation pressure, meaning higher interest rates. A weak one, rate cuts might be back on the table. And this month's report was a big shock. Not only were the new job numbers way below expectations, but past numbers were revised downward, big time. That sent a message. The labor market isn't as strong as we thought. The market reaction? Well, immediate. Stocks dropped, the US dollar weakened, and gold soared. Why did gold soar? Here's the key. Gold and the US dollar usually move in opposite directions. They're inversely correlated. When the dollar falls, gold gets more attractive, especially for international buyers, because it's priced in US dollars. Add that to the chance of lower interest rates, which reduce the opportunity cost of holding gold, and you get a powerful setup for a gold rally. We're now seeing headlines like gold near all-time highs, and it's not just inflation anymore, it's about uncertainty. Here's the key takeaway. These numbers may look backward, but their impact is forward-looking. One bad report can shift the entire rate narrative, and with it, commodities, currencies, and investor sentiment. That's why investors need to stay nimble. The narrative is constantly changing, and when the data drives the story, you have to read between the lines. Follow the Investor Breakout for expert insights that help you stay ahead of the curve. Canada's main stock index, the TSX, surged earlier this week, logging its biggest gain in 4 months. The materials and technology sectors led the way, fueled by growing optimism that the US Federal Reserve will cut interest rates in their September meeting. The materials sector, which includes mining and lumber production, jumped 5.6%. This is supported in part by a rise in gold prices and Prime Minister Mark Carney announcing up to $1.2 billion to support softwood lumber producers dealing with US duties. All 10 sectors on the TSX posted gains, with industrials and financials also contributing solidly to the rally. It's a big day for Canadian markets. But is this momentum here to stay? Let us know what you're watching in the comments. Midnight Sun has just kicked off drilling at its flagship Dumbwa target, a major copper and soil anomaly stretching nearly 20 kilometers. This is the first drill program across the zone, following a strong IP survey. One rig is already turning, with a second one on the way to speed things up. But here's the kicker. Midnight Sun sits right next to First Quantum's Kansanshi mine, and First Quantum just struck a $1 billion gold streaming deal with Royal Gold. With Kansanshi running low on oxide material and facing a sulfuric acid liability, a new oxide discovery at Dumbwa could be fast-tracked in production. It's early, but the setup is strong, and the timing couldn't be better. The market's always moving, from gold spikes and rate cuts to surprise earnings and political shakeups. We break it down fast, with the context that matters. Follow now so you don't miss next week's insight, and get ahead of the headlines before the market reacts. I'm Ryan Iverson, and I'll see you next week.